From a global perspective, the Aussie dollar, the US dollar, and the British pound appear to be similar currencies derived and utilised in relatively similar cultures and economies. It is for this reason that it is important to apply data trends such as relative interest rates, growth rates, and inflation rates to predict a currency's relative exchange rate within the next few months. Frequently, the US dollar is used as a base comparison currency for other countries to compare their own currency. In recent history, in comparison to the US dollar, the Aussie dollar has been steadily declining according to Bloomberg markets. The changes that have occurred in the exchange rate over time show that one Aussie dollar used to buy as much as 1.0566 US dollars in late 2012, compared to its buying power today of one Aussie dollar buying 0.8002 US dollars. Against the British pound over the last 5 years, the Aussie dollar has not been quite as strong as it has been against the US dollar. According to Bloomberg markets, in March 2013, one Aussie dollar was worth 0.688 British pounds, but a steady decline and then later a steady increase in the Aussie dollar has resulted in one Aussie dollar being worth 0.5886 British pounds today on September 15th, 2017. Although it is not always reliable to base our predictions of a comparative exchange rate or a currency's strength on its history, which is why we have considered factors of growth rates, inflation rates, and interest rates in our efforts to predict the exchange rate between the Aussie dollar against the US dollar and the Aussie dollar against the British pound over the next 3 to 6 months. In regards to interest rates, in recent history, from 2014 to present, Australia has had significantly higher interest rates compared to the US, although currently, according to the Reserve Bank of Australia, Australia's interest rate, otherwise known as the cash rate, sits at 1.5%. Uncommonly, the United States interest rate is quite similar to Australia's, sitting at 1.25% according to the statement issued by the Federal Reserve. Generally speaking, higher interest rates tend to incentivize people to invest money into that country as they then receive a higher rate of return on their investments. This increase of investments into the country then results in the economy being stimulated and ultimately results in an increase in a country's currency value and exchange rate. Given that Australia and the United States have a relatively similar interest rate, it can be predicted that their relative exchange rate will stay quite similar over the next 3 to 6 months, although perhaps due to Australia's 0.25% higher interest rate, there might be an increase in the Aussie dollar exchange rate compared to the US dollar over the next 3 to 6 months, but only marginally.
In regards to growth rates, the Australian economy expanded 0.8% in the June quarter of 2017, much stronger than the 0.3% growth in the first quarter and the matching market consensus. The solid expansion was mainly supported by strength in domestic demand and net exports. In comparison to overseas, the US economy expanded an annualized 3% in the second quarter of 2017, well above a preliminary reading of 2.6% and beating market expectations of 2.7%, which is the strongest growth rate since the first 3 months of 2015. Increases in consumer spending and in non-residential fixed investment were larger than previously estimated, offsetting a drag from government expenditure and investment. And moving on to the GBP growth rate in the UK, the British economy grew 1.7% in the second quarter of 2017, after a 2% expansion in the previous period. It was the lowest annual growth rate since the second quarter of last year, as household spending rose at a softer pace while business investment stalled. There was a relatively strong growth in government spending and investment, while household consumption rose at a softer pace and business investment stalled. The growth rate in the UK averaged 2.45% from 1956 until 2017, which illustrates a slower rate of growth in the last 3 to 6 months than on average in the last 60 years. This contrasts strongly to the Australian economy, which is showing great signs of strength in regards to growth, over doubling its rate since the last quarter.
As the rate of inflation has been fairly underwhelming in recent times, due to several factors. The reduction in penalty and award wages for Australian employees in the retail sector of the economy has heavily contributed to a downturn in inflation, as wages are required to rise with the general prices of goods and services. As the graph shows, there should be an upturn in inflation rates in Australia in the coming times, picking up over 2.5% leading into the following year of 2018. However, it still should be growing at a steady rate as the economic activity of Australia begins to pick up. In a similar position to Australia, the United States are experiencing subdued inflationary growth, with the August figure showing 1.9% of inflation, which fails to reach their goal of between 2 and 3% of inflationary growth over the business cycle, which has decreased from as high as 2.7% in January of this year. As inflation is slow in America, this can be managed by increasing the supply of money faster than the pace of economic growth, which allows more room to reduce borrowing costs overall, which will then reduce national debt and allow necessary economic adjustments to be made in order to improve the economy. As opposed to the Australian dollar, which is in need of a boost in economic activity, inflation has been quickly rising in Great Britain, as they may find now that the overall cost of living has reached its highest rate in the last 5 years, which is due to an increase in the price of their commodities such as sterling, which has risen over 16% in this year alone. This increasing rate may need to be managed by increasing interest rates to combat higher prices, which allows people to save their income as opposed to spending it, resulting in a lower, however well-ordered rate of inflation, as well as controlling the fluctuations in the Great British Pound due to the recent circumstances surrounding the economy, such as Brexit, which has resulted in volatile activity towards the British currency ever since that incident. This may need to be managed by increasing interest rates to combat higher prices and allow people to save their income as opposed to spending it, resulting in a lower, however, well-ordered rate of inflation, as well as controlling the fluctuations in the Great British Pound, which has been seen due to the recent Brexit circumstance, where volatile activity has been shown heavily in the British currency ever since the incident. As opposed to the Australian dollar, which is in need of a boost in economic activity to stimulate spending and discourage borrowing, this will depreciate the overall worth of the Australian dollar as inflation and growth will begin to rise.